Hello everyone and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. My name is Jesse Day and we are here today in Zagreb, Croatia, doing a live interview, which I'm very excited about. And I'm here with the founder of LithiumBank as well as CopperBank, now Faraday Copper, Mr. Gianni Kovacevic. It's great to have you on the show.
Nice to be here. You're in my city. You're what they call a digital nomad.
Yes.
And we're going to be talking junior mining.
Yes.
And I think it's going to be very informative. And hopefully, the questions that we talk about are things that people have not seen recently. So it'll be, something that's informative and I think entertaining.
Yeah, that's always the goal here. And before we dive into that, I like to start with every guest's origin story. So how did you first get involved with investing? How did that lead you to the commodity space and ultimately founding CopperBank and LithiumBank and the other projects you've worked on?
Well, junior mining, you're not actually investing. What you're doing is speculating. So you want to have educated, evidence-based, dealing with good people, speculating. And what computers and software are to Seattle and San Francisco is what mining and natural resources are to Western Canada. And having grown up there, high school, I went to BCIT for electrical studies. As you start entering the workforce, a lot of your friends are within these parameters of mining, if so to speak, including speculating and finance. And then we had a couple booms, Jesse. I got sucked in just like everyone else, and the rest is history. And it's a fantastic business. I think it can create a tremendous amount of wealth for people, but you do have to be careful. And it's, unfortunately, it's as George Bernard Shaw said over 100 years ago for horse racing back in those days. And his quote was, horse racing was created by the upper classes and the lower classes to fleece the middle classes. And, when you talk to people around the world, particularly Americans, they're just terrified sometimes of, junior mining and penny shares and stuff like that. But it's certainly easier for a 10-cent share to go to $1 than it is a $10 stock to go to $100. And if you're investing $1,000, well, the math is math. So that's why people follow this industry and will continue to do so.
Right. Well, why don't we dive into the junior mining space, the DNA of the junior mining space? I had Peter Grandich on recently, and he was talking about how there are so few junior mining companies that actually make it, that actually make meaningful discoveries, and that the failure rate is incredibly high. So when investing in those types of assets, you really need to be prepared to lose part or all of your capital. So given the inherent risk, why do people start junior mining companies to begin with? What's their importance in the overall commodity space?
That's a fantastic question, Jesse. And as the famous metric is for 1,000 shots, 1,000 drill hole opportunities, one of them becomes a mine.
Right.
This is a very risky business. It's ruinously expensive. And if we're talking junior mining, we're talking about speculating. There's really three different buckets. Bucket one would be just that. You have a piece of moose pasture and people are going to go drill a hole. And if you hit oil or gold or copper, it's interesting and the share usually appreciates. Bucket number two is the type of delineation where a discovery's been made. It's exciting. They raised more money, and now they're going to drill the Swiss cheese out of this area to try to delineate, do we in fact have something that might be an economic deposit? And then bucket three is the famous Lassonde curve. Well, everything's been delineated. It's got a PFS, and now they're starting to build it. And it's boring until it starts cash flowing. But it's all junior mining, and it's all speculation because none of these companies, none of these ventures make money. They burn cash. And if you talk about 1,000 opportunities, there's just too many junior mining companies. There always is, especially in a boom market. And Pierre Lassonde just recently said in an interview, I heard him say it, that the reason it's so manic, so the high highs and the low lows is because in a boom market, it's always overcapitalized. And he said always. And in a bear market, it's always undercapitalized. No one can raise money. They go bankrupt and the cycle repeats itself. So the DNA of junior mining is to understand that, knowing which bucket you want to be speculating in, because in the final bucket after the Lassonde curve, you're not making a 10-bagger or 20-bagger anymore. It's pretty hard. In the second bucket where it's now in the delineation phase, you need to answer some unanswered questions and hopefully with a big positive surprise. Oh, new zone, new rich area, better grades than we thought. Oh, we got a commodity that's rising in price at the same time we're doing all this work. You can make outsized returns, but still pretty hard to make a 10-bagger. But if you're drilling for a new hole with good guys based on evidence, that's where real fortunes are made. Unfortunately, Too many people get involved, they create too many companies, and there's just not enough success. And people chase that dream. Everyone loves to invest in the junior. Everyone loves the opportunity, but they're all crying in their beer when it misses. Because guess how the movie ends, Jesse? If you don't hit, the money goes to money heaven. That's
right.
it. The movie's over, so you got to go do something else. So I generally stay away from that type of opportunity with very few caveats. I've been doing this for 25 years. And I recall about 3 years ago, they wanted to drill for helium in Arizona on the Arizona-New Mexico border, Desert Mountain Energy. And I wasn't doing my things, but there was based on a lot of evidence with good guys, and they struck the highest pressure, highest grade helium well, I believe, ever. And that stock went from 20 cents to $5. So that's speculating, but doing it with a little bit more, with good guys, based on evidence, and with at least the theme is there. So in my view, that's where people need to be looking, but fortunes are definitely made in the discovery phase.
Right. So how does one sort through all of these different companies? Because a lot of them, you also have lifestyle companies where, the management is just kind of milking shareholders to support their lifestyle, which we've all heard stories like that. You have ones where they end up finding a discovery, but it ends up being uneconomic to mine. So how do you sort through all of those? What are the key details you look at when you're considering a junior mining company that leads you to an investment decision?
You can use the KISS analogy, keep it simple. But the people that create these companies, you have to be aligned with them. If they are in it for the stock option and they don't have real money, hard money, real dollars that they earned, and they don't buy the shares, and they're not doing a little bit of insider buying here and there to support the company, the good guys in the business, they always write the first check. And the 4% rule, which Pareto's law, where basically 20% of the people create 80% of the gain. But within the 20%, there's 20% of those guys create 80% of the game. So you really end up with about 5%, 4 or 5% of the participants in this industry really have outsized gains. So you want to follow them, and truly this is a lifestyle company situation where if you go down the floors of any big mining conference, maybe 500 companies there, but how many of these guys are really aligned with you? And you have to be honest with yourself, and you have to look at the characters and the participants, and it's always kind of the same guys. And before, I don't know how long you've been following junior mining, but before this China super cycle, as we came into that first big boom, 2004, 5, 6, there were guys that were on 10 different boards. You can't love 10 different things. You can't be focused. So I'm a nobody. What am I? I mean, I just stick to my knitting. I've made money in the industry. I've lost money because with bravado, but hopefully you learn from those mistakes. And what I did in that epic bear market is that, I could speculate a little bit on the side, but the fact that you lose 80% of your capital, you lose your little soldiers that go to war for you in private placements. Yeah, I stuck to my knitting, and I just basically said, I'm going to focus on one company. I'm going to focus on one set of projects. When I get up in the morning every day, I'm going to think about one commodity and one company, and that's what I'm going to focus on. I'm going to work on it, build a big position, and you don't have to be distracted by all these other things. I'm not going to get involved. I had opportunities galore, and I just wanted to do one thing, and that thing was CopperBank. I believed in the commodity copper. I followed it for 25 years. I know it. I'm not going to be a braggart, but I did the keynote at the copper dinner in Santiago, Chile. That's a big honor for me, and I can say that I earned it. I think I really know what I'm talking about when it comes to copper, and that was my way to play it. And we were speculating at the time that you buy these projects of merit, and of course, what was the fatal flaw there? Copper price, uneconomic. And we would speculate if the copper price would climb, that someone would want a project like that, because it wasn't a 1 in 1,000 anymore. It wasn't a 1 in 100 anymore. It was a 1 in 5. The people before us spent $100 million. There's a lot of evidence. There's a lot of reports that came out. So we were able to once again speculate with a bit of like counting the cards behind us, if you will. And that's always been my motto. And now we've dabbled very quietly, very passively into the lithium business in a very patient way. It's been almost a 5-year exercise now. We're going to talk a little bit more about both these opportunities, but that's the way I look at junior mining. I think the amount of companies that are created and the amount of people that just aren't dedicated, aren't motivated and aligned with the shareholders. I mean, there's not companies. The amount of these companies is enough to make a cat laugh. It's ridiculous.
Yeah.
1,000, whatever the commodity is listed. It should be far harder to list a company, meaning the people, the directors, the people involved should have to put up more real capital. It has to hurt. You know, it's a little too easy to create a company with I think very soft assets.
So what is your opinion on, for the average investor out there, getting to know the management of a company? Because obviously there's live conferences where you're able to go and talk to these people. But aside from that, investors generally just have a bio on a website. Do you think it's worth reaching out to these CEOs or their IR department, asking the hard questions, and then determining, well, if they don't answer or if they give you kind of a dismissive answer, then maybe you should move on and look elsewhere for opportunity?
Well, look at the analogy of buying a high-quality used car. You're not going to buy the first car you see. Now, maybe if you've looked at 20 or 30 or 40, you start to understand, I'm looking at that type of car. I kind of know what's going on in the industry, and you can kind of trust an owner in some cases. And I think the more people you meet, the more opinions that can be generated. And I think it's something that pays dividends. But it's more important about knowing the obvious pitfalls and the DNA of the company, the DNA of the sector, the commodity, and how it's evolved. Trust factor. What have they done in the past? And you can, speculate on newer people if they're dedicated. But if you see Joe Smith and he's involved on 9 companies, and other people, you want to understand what people's impression or opinion are of people, but be careful. You have to take that with a grain of salt. But if they're pitching some new idea every 3 weeks, you can't love 10 things. You can't love 9 things. You want people that are dedicated. Maybe he's done it for a while, and if you understand how the stock has went up and down, I think that certainly can help people. But the only way to do that, Jesse, is guess what? You got to burn shoe leather. You do have to go to conferences. You have to speak with people and make your own opinion. And then even when you hear sometimes a negative opinion, and I'll give you an analogy. I acquired the Copper Creek project in Arizona. And I was involved with Cobra Panama, Petaquilla before that. And if you talk to good people, honorable people with good reputations, and you ask about, oh no, the project's never going to work. And okay, and then unfortunately, that sort of opinion of a project proliferates over years. And of course, it missed a cycle. And we go to a bear market and the share price collapses and they go bankrupt and they can't pay their payments and someone has to come in there. And the project maybe went over 20 years, goes through a couple of those cycles. But if you go back in time, why did this person give me a bad opinion? Well, what happened, and I'm going to make up a story here, but in 2003, Gary went to the site and didn't like it. It's never going to work. It's not going to be mine. And he went to PDAC and he told Dave, hey, he went to the site, it's never going to work. It's a dog. Forget it. And then 4 years later, they raised more money and, Dave's now at PDAC in 2007, and he talks to Colin, and he says, that's forget it. I know that's a dog. Knows nothing about the project, never went there, only because he trusts Tom, and he can go with that, because usually these projects do not work. Your default by saying no is the right answer, probably.
Right.
And then Colin talks to Stephen, it's never going to work. And next thing you know, because they're all trustworthy guys, and sometimes they're having a beer, but they never did the work. They never did the actual work. So you want to know, well, why? Why do you have a negative opinion of that project? And really understand that, and who, and how's that based on, and who's on the site visit with you, and what's that based on? Because sometimes that's a missed opportunity. And that's what, so far, I'm in my mid-40s, and I've kind of made my little tiny career out of that, is by what people said no to, by having other guys, by doing the hard work and taking other people that I trust and going there and burning the shoe leather. That's an opportunity. That's an opportunity. And that really is the fourth bucket, which not the main 3 of junior mining, because it's boring.
Right.
It's the acquire an asset and do nothing. Covet each issued share and make it accretive so that nothing happens. And when we raise capital, we don't issue warrants, and we raise just enough money to pay for the property payments, so that because we're not doing anything accretive, we're not actually increasing the pounds. And every year we had to do that, you're eroding slowly the torque on a per share basis. Now, why did we care? Because we owned a mountain of shares. We cared about the share price appreciating. And so that, to me, when I was telling this story in the beginning, maybe people don't believe you, but after 3 or 4 years of saying that this should matter, people could say, this is pretty good dedication. This guy's focused. He's not doing other things. He says what he does. He does what he says. And you could have bought a share of Faraday Copper for 10 cents or 8 cents. It's now $1.
Right.
That's a 10-bagger. And I slept well every night because we weren't really speculating. We weren't risking. We were just waiting for the market to mature, that people more qualified, more seasoned to go and take this project to the next steps. And that's something that you can only do, bucket 4, acquiring a project after a bankruptcy in a bear market. You can only do that once in 10 years because you need to have a crisis. The market has to be tough, has to be terrible. And Rick Rule will always tell you, he makes his money in a bear market, not in a bull market. Bull market's where you take liquidity.
Yeah.
But the deals are always made in tough times. So I think we're now in a sort of a medium time because the commodity prices are still pretty good. And I think not enough has been developed in the last 10, 15 years that it's going to create a big bear market. I think that the rest of this decade is going to be very good for metals in general, but particularly copper and lithium.
Yeah, well, let's touch on those two commodities. I definitely want to hear about Faraday Copper and LithiumBank in more detail as well. But before that, you spoke a little bit about the macro of copper and where it's at right now. So I'd just like to know where you see it positioned, maybe in some more detail, because we're seeing this big trend of electrification, the new green economy. We're also seeing the emergence of a new middle class in a lot of developing nations, which means they require much more electricity, which copper is absolutely the king of when it comes to commodities. So where do you see copper positioned right now, and what do you see its role moving forward in the years ahead?
Two parts to this question. The first part is you don't have to lose any sleep about the demand of copper. It's going to go from the bottom left to the upper right of your screen. Is it going to be 3, 4, 5% CAGR growth rate? It's going to be fine. The situation is that we are not going to be able to fulfill the demand of electrification, the enablers of it, with only copper. So there is going to be a perennial shortage, and this is going to be made up with aluminum. We're just going to have to use more aluminum as this electrification trend continues for really the rest of your life, Jesse, but really in particular the next 10, 15 years as the iceberg is turning and finally changing direction, and now we're going down that path. So I think that the second part of it is price, because nobody in the world wants high copper prices. The junior speculator has to recognize that. There are 20 major companies that produce most of the world's copper, and they're the only ones really that want a higher or stronger copper price, but they too don't want a bonkos high price because too many idiots get involved in the industry. So they want the right price. And who are they against? The world. Because no fabricator celebrates a high copper price. They have to pass that price on to their consumer. Right. And who's the single biggest buyer and fabricator of copper? China. And China has learned from the last 20 years. And we had this clumsy, elevation of commodity prices where did it make sense that from 2001 or 2 until 2005, copper prices would go up 500%? No, that's kind of illogical. So now they've learned a little bit. And so I can tell you this, as long as you have a futures and options market in copper, you're never going to have a true price discovery for a long period of time. And we are always, Jesse, going to have an options and futures market. And so this is why that you're always climbing a wall of worry. So in the last 20 years, and I followed copper very carefully going back to the early 2000s, and their copper price was elevated for most of that time. But we were always climbing a wall of worry. If you look at the times of ebullience, euphoria in the market, to the times of boring, what's happening, climbing a wall of worry, or outright despair, panic, depression, about 15% of the time, it was good times. The other 85% of the time, we were doing all those other negative things. So that will continue. So the money is made in that 15% of the time that there's euphoria in the market. And if you're not in, Jesse, it's hard to get in. Because you follow a stock that was at $1, went to 20 cents, 25, went to 50, went to 20, now it's 18, goes to 21. You don't want to buy it. The markets, there might be coming a recession. You know what? It goes to 50 cents in 3 days. When the market turns, it turns violently. The problem is you don't buy it at 35 or 40 on the way up. And at 50, you say, I missed it. And then it goes back up to $1. You have to own it in the darkest days. And it may do nothing for 6 months or 18 months. But otherwise, you're just not going to own it. And who cares? If a stock went from $1 to 20 cents and it's now 18, it's closer to the bottom than it is the top. Now, I will qualify that. Good guys that can raise money, real project, not going to go bankrupt, no debt, not going to zero. It's going to stick around because it's psychology. And psychology is so important with investing, but more important with psychology, with speculators, sorry. It's more important with speculators because they're very emotional. Greed happens very fast. Fear is a long, protracted emotion, and it's hard to turn it around. But that's where opportunity is met. That's where you make outsized returns. And in junior mining, always has been, and it always will be, in my opinion.
I love that. Let's touch on the political situation going on right now with copper, because you have a lot of these nations that were previously, the bellwethers, the legacy brand countries when it comes to copper mining. Now you're having the emergence of socialist governments, and you're having some issues with getting copper mines permitted. We're seeing situations in Panama, in Chile, and Peru, as you were mentioning before we started filming this interview. So in Alaska as well, there's been a recent copper mine that's been rejected by the U.S. Environmental Agency. So is there anywhere, where are the places left in the world to mine copper where you don't necessarily have to worry about political risk? And how much should that really be on people's radars, the threats of governments stopping these copper mines?
Well, the answer is there's nothing left. It's either going to be political sensitivities, environmental sensitivities, or what AK-47 security type sensitivities.
Right.
So what you're referring to, I think, is Peru and Chile. Chile by far is the world's biggest producer of copper. Peru is now the number 2 producer of copper. And they were traditionally, especially if you talk about this last 20 years and the boom that we've had in copper, there were places that you kind of bragged about. Said, I got a project in Chile. I got a project in Peru. And it's kind of, okay, interesting. It's not in Crazyville or it's not, but that game is kind of played out now. It's getting a little bit more tricky. We've seen the way governments change. And even though you have certain set of parameters one day, you have a different type of government, all of a sudden it's different the next day. And there's the other situation is where you go to a political, let's say, how do I say this in a polite, eloquent way, but places that do not have known for the rule of law. And you can name those countries if you wish. I'm not going to do it, but it's they're just publicly listed companies, big ones. I'm talking about the top 20 copper producers. They're all publicly listed, other than Codelco, which is the Chilean company, but the ones that go and do these things. And who makes up the board of directors of a large mining company? Well, it's not miners. It's not speculators. It's lawyers and accountants and very risk-averse people. They are not, doesn't matter what the copper price does, doesn't matter what permissions they get. They're just not going to be going there. So guess what? You start running out of places. And this is really going to hit the market, in the future. We always say the future, but just imagine what it looks like 10, 15 years from now, because the demand's going to be strong. You don't have to worry about it. It'll be taken up by aluminum, but copper is going to be very dear, very precious, because we still have all the other issues of grade depletion and everything else. But you start going to places with just smaller mines. You don't have to worry about something, the mega mine that produces 300,000 tons a year. Maybe you got to do 3 projects that produce 75 to 100,000 tons a year, but you buy 3 of them or you do 3 of them. And, and I think that's where the market's going to go for some of these companies. And that's a sweet spot. And talk about these 3 buckets. I think that's where buyout action will happen. And I believe I'm no longer involved with Faraday Copper. I'm just a large shareholder. But I believe, and I can say this, from my own comfort level, I believe this project will be bought out by a larger company. And that's where it's going. And it's my speculation, but I'll speculate. And we'll see what happens there. But it's going to be political sensitivity is not leaving the stable. It's going to be in the barn, and you're going to just want to be in the right stable, I think.
So you're the founder of CopperBank, which eventually turned into Faraday Copper. Could you maybe give us some more details on the company, an overview for those that are familiar, and let us know which of those buckets, when it comes to the junior mining space, do they fall in?
Well, to recap, Faraday or CopperBank was a special situations. The market was so bad for so long that we decided, me and a group of, at this point, dare I say investors, to buy a couple of established, well-situated copper projects and just put them in a company and do nothing. Don't advance them. And just wait for the copper price to normalize and basically keep the share count as clean as possible. We never issued a warrant. We did our own financings, typically always a little bit above the market. And the people that got involved were anyone that actually came and did the work on the project. We had Alan Wilson, that was with Antofagasta, joined the board. We had Mark Fow, who was a qualifier for Cell 32, came to the project, got involved as my key technical advisor. And then Russell Ball and Paul Harbridge did a deep dive on the due diligence of the project, and they made a proposal that they would like to take it through the next steps of development. And these gentlemen have a very good reputation. Paul Harbridge was a Newmont Goldcorp guy, right-hand man of Mark Bristow, and it has just a tremendous track record from a big company thinking, and went to Tucson, went to the project, which is about 100 kilometers north of Tucson. And because, almost $100 million was sunk in that project, Jesse. Now, these are 2005, 2008 dollars. I don't know what that is today, inflation adjusted. It's a lot more, I can tell you that. And it has metallurgy and hydrology and all the different things were already completed once upon a time. So they were able to look at that and say, this is a shot. So they made a proposal to take it over, which we gladly did. That was always the business model. I've already said I'm not qualified to do those things. I'm not going to pretend to know to do those things. And they got on board. They raised $20 million at 80 cents. Market sold off, and they just announced a $40 million bought deal financing, and that's going to basically answer, I believe, the last series of unanswered questions. And as they started drilling again, sure enough, higher grades, near surface. So the idea is to release a PEA in the next, 60 days or so, which is going to contemplate a small, higher grade open pit with a large, shallow underground bulk mining operation. But all the drilling they're doing, Jesse, is higher grades near surface. It's changing the story. It's becoming a bigger and bigger story. So I think that turned out very well for us. Me and the people that followed CopperBank and supported it, and now with Faraday, I continue. I've sold a little bit of my position, buying some real estate here and there, but it's I still continue to be a very large shareholder, and I believe that's going to get bought out. And so that strategy, what only works in a bear market, and it's something that started in November of 2014. A long run, patient run, but for anyone that was with us, it's already a 10-bagger. And I believe there's room to grow. So that's a pretty exciting story in my view.
Very interesting. Let's shift to lithium now and get a little bit of your thoughts on the macro overview of that commodity, because we saw lithium carbonate prices spike dramatically in 2022, in March, I believe, initially, and then another spike again later in the year before coming back down to still nonetheless all-time highs. So where do you see the price of lithium going forward in the future? Is there room for more of a correction, or do you think more upside from here?
The lithium price has climbed from 10,000 to 80,000. It's high. It logically should roll over or fall to some lower level. Price I can't tell you, because it hasn't been like the other classic commodities where it's went through 10 boom bust cycles,
right,
price-wise. And it's also growing. The demand is growing even more than copper. The CAGR growth rate of lithium is like 8, 9, 10, 12%. So all the lithium that can be produced is going to be taken up by the market, growing from 300,000 tons a year to 2 million. And where will this lithium come from? It's going to have to come from new sources. So I can't tell you what the price is going to do. That's a bit of a mug's game. But what I will tell you is companies in their economic models should be using around 20 or 25,000 a ton. If the project does not work at those prices, it's probably not going to work. You should not be so you got a huge margin of safety there. And in my view, I'm speculating that the future extraction of lithium that's going to be given to people in technology and industry and the car manufacturing businesses in a battery of the future is going to come from what's called direct lithium extraction. Because currently lithium is coming from the famous salars evaporation in South America, and hard rock mining. And that's maybe an opportunity there, but I believe the DLE, which is coming from these reservoirs, briny water is pumped up, the grade is boosted 30, 40x, and then it goes through a final chemical process to provide a lithium product for a battery of the future. They are now, hundreds of people, thousands of people are working on this. As more confidence comes into that, there's going to be, I believe, a big opportunity for people that have choice projects, large land packages. And the analogy would be like this, Jesse. If you remember the shale revolution and horizontal fracking, when they transitioned from gas, this is a discovery of when they merged the two technologies, horizontal fracking, 2002, 2003, with the merger of Devon Energy with Mitchell Energy. Then they transitioned to oil in the late, like 08, 09, 2010. and they rediscovered the wheel. It was just amazing. And what did the Bass family do? They sold 250,000 or so acres in West Texas, shale formations. It was only producing 18,000 barrels a day, and they sold it for $6 billion. They had the land. The industry could crack that code. So that's what we're doing with LithiumBank. We are the largest landowners of these brine reservoirs, I believe, in the world. And we came out with a press release just yesterday about our Park Place project, which has the largest contained reservoir in North America. The thing is we're going to be providing a resource on that project, and I think it's going to, well, people can do simple arithmetic. The grade is about 77 milligrams, and then it's the size, and then you can just basically do arithmetic on what a resource could be on that project. This is our number 2 project in LithiumBank. Our flagship continues to be Boardwalk. Boardwalk because we're going to be releasing a PEA this quarter, a preliminary economic assessment. So we're bunkered by 2 projects. So if you ask me what bucket is LithiumBank, it's kind of in all 3, because we were able to delineate a resource relatively cost effectively and time effectively, because we're sampling brine water from existing oil well infrastructure. Right? So that happens quickly. We're able to provide a PA relatively cost effectively and time effectively because we're able to piggyback off a lot of the knowledge that's already learned by the industry. And it's also a development story, because once you have your PA, now what are the steps to take this to demonstrate to the market that this could be a project that could provide a lithium product in the future? And we did this in a very short period of time, very cost effectively. LithiumBank has 37 million shares outstanding, and we control this just about 3.5 million acres right now on 4 projects, including, I haven't even talked about the Saskatchewan portfolio. But it's a tremendous opportunity. So where does my heart beat again? The share. We own shares. We want to create a lot of value on a per share basis. We're not interested in all this other nonsense about having, cheap warrants and cheap financings and all this stuff. We IPO'd in August of 2001 at 2021 at $1.50 a share. We IPO'd, the market went to hell, the share price, it was 2022, September 2022, and the share price just fell off. That was an opportunity. But still, what won't change is we have 37 million shares outstanding. So even when we do our future financing, which will inevitably happen sometime in the future, it's not going to change the share structure too much. And that offers people to speculate and to have, like us, the owners, I'm the founder, a lot of value on a per share basis. So if you buy a share today, you relatively know, it's not going to get blown out of the water share-wise 2 years from now. Meanwhile, we're going to be driving a ton of news and a ton of accretive value creation with multiple projects on what I believe is the commodity really of the next 20 years. Lithium is something people should continue to follow. Don't be worried about price. It's not going to stay at 80,000 a ton. If it does, it's a good problem for us to have. Our economic models, Jesse, are going to be modeled around 22, 24,000, something like that. So very conservative. If we get a higher price, fantastic. It's a good problem to have. But it's a great barometer, and I think it's an exciting technology, and it's an exciting company in what is going to continue to be the most interesting commodity of the commodity landscape.
So a big driver for lithium demand seems to be lithium-ion batteries in electric vehicles. And some people are a little skeptical of the whole green energy revolution, myself included, admittedly, and the whole EV revolution, changing over internal combustion engine vehicles to EVs. It feels in some ways like the EU was recently ruling that no internal combustion engine vehicles will be sold. I think it was by 2040 or something like that. That seems insane to me. What is your thoughts on that particular law? Do you think in some sense these governments are putting the cart before the horse and there should be a bit of a more measured approach? Or do you think things are on the right track?
Well, it's nice when the Netherlands and Norway and small countries talk about having these targets, and maybe they'll get there, maybe they won't. But that's not my focus. My focus is on by far the world's largest automobile market. This is China. What is China doing? How is China succeeding? It's working. It's happening. It's being built. They need the batteries. The automotive market before COVID is about 90 million units for those watching at home. So that's how many cars are made and sold globally.
Right.
China they were about 27, 28 million. Okay, so what they do matters. What Netherlands does, is okay. But having said that, it's millimetrical progress, but it is happening. And I think the frustrations and the experience that by the time you get to about 2025, the real model changes start happening and people are really going to experience it. And I will submit to you that there's not going to be anyone, 95% of the population of any city in the world, at least someone will have driven in an electric car. Many people will own them. And then once that experience proliferates through society, you're going to need more and more cars because it's really going to take off. It's going to be parabolic. I'm a supporter. I like it. I've owned a couple Teslas, a BMW i3 electric. It's a great car. It's just an amazing thing. The frustration is the charging. If I go on a ski trip to Italy, it should be like a gasoline station.
Yeah.
And it's shame on them once again. It's not that it doesn't work, Jesse. It works. But how do you make all the infrastructure at a petrol station, do all those works, and then have one single fast charger? Shame on you. Shame on you. You build 4 at least. They do it on purpose. So once that actually happens, and it happens very fast, it's not like me saying we have to build 10,000 gasoline stations, because to build a gasoline station anywhere in the West takes about 3 or 4 years.
Right.
To build a fast charger, when the infrastructure is there already, takes about 1 week.
Right.
Okay, it's already there. So, now it might take a bit more work and a little bit of permitting to get to the first one, but once it's there, to build the more, this is not difficult. And I think that's a different story for a different day, because all the different pitfalls where people, the myths, the false myths about electric cars. So once again, I don't lose sleep about that. I believe whether it's 20% of cars sold at the big markets, namely China, or 30%, it's irrelevant. The demand for lithium is going to go from the bottom left to the upper right of your screen. Whatever lithium is provided by the lithium industry is going to be taken up by the chemical companies, the industry companies, and the car companies, until we get to maybe 2 million tons or so. And then we'll see what happens. So the rest of it is a rounding error. It is still going to be, because it's in its first mega boom cycle, dovetailed with mega expansion and take-up of the product. We'd have to go back to like the first Model T rolling off the assembly line in 1908. Like, you didn't have problems in commodities and rubber and steel and oil for a long time, until that was proliferating. So it's something that people will see. Proof is in the pudding, but you should still be following your favorite lithium company. And I really encourage people to take a look at LithiumBank, simply because it's still, on a per share basis, based on the projects we have, if you're looking for something that has not had that parabolic move, LithiumBank is a company that people want to follow. And I just, as a side note, all the companies that put out their first economic study, look at their share price 30 days after it took off. I'm not going to do the work. You do the work at home. The shares didn't double. I'm talking, these shares went up 10 times. So that's interesting. So let's see what happens.
Before I let you go, we've talked copper, we've talked lithium. Is there any other commodities right now? Obviously, a lot of the metals are on a lot of people's radars right now, but maybe a commodity that maybe isn't so much in the limelight right now that you think investors should maybe be paying attention to. Does anything come to mind?
Is uranium in the limelight?
For viewers of this show, it certainly is, but I think for the wider investing public, it isn't. But please talk about uranium, because we love hearing about it on this show.
Well, uranium is an interesting business, because if you recall the 2006-07 boom, there was, 450 uranium juniors.
Yeah.
There aren't 450 uranium projects. There aren't the qualified individuals to work in uranium at the time. It was, it was quite comical. You could see that one coming. But fortunes were truly made. I believe uranium has to be a business that makes money. Uranium at these prices is not sustainable. As far as nuclear power is concerned, I understand power systems. I followed it my whole life. I mean, at a crazy level. The amount of effort and the amount of knowledge that I had on global power systems as China built their network was, I could go toe to toe with any energy analyst, and I've done so. And I'll let them. You can have a Google at your hand. I just ask me questions, and we'll go on that basis. But here's the situation. We don't worry today, if you're talking to the CEO of a power company, not you, not me, not speculators, it's a business. It's a business case. They're not interested in it for that reason. It's ruinously expensive. It takes a tremendous amount of time, and it's always over budget. So we've got problems right now. They've got energy security issues, and they're talking about weaning themselves off of Russia. You will not, if you decide to build a nuclear power plant today and you fast track permitting, you're not going to get 1 kilowatt of power out of that thing for 10 years.
Right.
They know this. And you look at the cost, where these numbers might be a little bit outdated, but to build a megawatt of solar power is now less than $2 million per megawatt. Wind power is like $3 million a megawatt. And in some cases it's 4, some cases it's 2. Conventional thermal power, and it can be natural gas or coal, they're kind of transferable. Before it was about 2 million. We have inflation now, so maybe I can't give you the exact number, but let's say inflation has doubled it. It's 4 million. You know, nuclear is about 20 million, right? It was 14. That's what we're finding with projects that are over budget. You could build a solution for a place that, because it's intermittent, it is not sunny all the time and it's not windy all the time, but you could build a gigawatt of solar power, a gigawatt of wind power, a gigawatt of baseload natural gas, because it's the best peaker power, and it's still half as much as it would be to build a gigawatt of nuclear power. Now, nuclear watt is emission-free. It is the answer. It's magnificent. Unfortunately, it came 50 years too soon. So we'll see the fortitude that some of these people have, but if you look at Francesco Starace runs Enel, the world's biggest electricity company, operates in 30 countries. Now, I'm not talking about China with the China state grid and so, but I'm talking of the rest of the world. And his quote is that if you've got nuclear power, keep it, use it, maintain it, embrace it. But we're not going to be building new nuclear power plants. It's not the way forward. That effort and those billions of dollars need to continue to go to this network, including storage and peaker power. Fossil fuels will continue to play a role, but it's going to be natural gas. Why natural gas? Why intermittency? When those other things don't work, coal is no good because it takes days to turn up and down. Nuclear takes about a month to turn up and down. Now, some will argue a week or 2 weeks, but it's not intermittent. It's always on. It runs at 100%. Natural gas you turn on in 5 minutes, Jesse. So when you look at cost or emissions, it's not 7 days a week, 24 hours a day, 365 days a year, because you need the natural gas 6 hours here, 8 hours there, 2 days in a row there. But when you look at the context of a calendar year, it's way more cost effective. So now you have to have natural gas or access to long-term LNG, which is exactly what the world is doing right now. They're expanding these tentacles and these networks and or natural gas. And that's going to be the way forward for the next 20 years. So that's really the way forward. With respect to oil, oil is going to be important for the rest of your life. But what drives me crazy is it's better to take a barrel of oil and to create an enhanced product than to turn it into a transportation fuel, burn it, and it's gone forever. That's the frustrating part, what people don't understand. It's not using oil or not producing oil. Oil's a very special commodity, but using it in a more long-term way, in a more logical way, rather than just burning it. And for all the other reasons. That's why I believe electric transportation does work. It will continue to work, and it's going to continue to surprise people. But it will only be possible with copper and lithium, in my view.
Okay, but I do want to have you answer the question. So are you bullish on uranium at this point in time? Do you think there's opportunity there? Or do you see that as a story maybe further into the future? How are you looking at it?
It's logical that we're going to have a mania in uranium.
Okay.
It's logical.
Right.
Because you cannot continue to produce uranium at a loss. That's not sustainable. And it'll be like the other commodities. Remember, I talked about copper. 15% of the time is euphoria, 85% of the time is misery. But when the market goes parabolic and when there's a mania, I would strongly suggest to people to take liquidity.
Yeah.
Be thankful. The mania occurred. You don't have to make 1,000% or what have you. And then also be careful in the juniors. I don't know how many uranium juniors there are now. They're spawning them by the dozens. They're coming. Yeah. They're coming fast and furious. But there's not enough qualified people, just like there wasn't in 2005, 6, 7. There's not enough qualified people to run these companies. So pick your corners. And it's a tricky one because I know a lot of guys in the uranium business, and it's they've done very well. My very dear good friend is Amir Adnani, and he's done an amazing job. I know that company since day one, and you made a lot of money. If you were following the trends of uranium energy, you did very well. And I believe, once again, I'm not involved in the company whatsoever. Someone will buy that business. They will buy it out. Now, will Amir Adnani get into another uranium business after he sells that one? We'll see. Or maybe there's something else for him to do. He's a brilliant guy, and his team very qualified. And then you could go down the food chain. I would say there's not 10. There's not 10 qualified teams, and probably I'm being generous with that. So you cannot have 30 or 40 or 100 or 300 uranium juniors in the future. So tricky answer. Kind of a hedged answer.
Yeah.
But a mania is going to come unless it's derailed by God forbid, an accident or some political situation. Sure. So we know, like farmers and people in the oil industry, the most important factor is no longer the weather, it's politics. Yeah. Politics is going to be very important for uranium. As people should know, it's where it's produced, predominantly from Kazakhstan. Yeah. And the Russians, how they have a very strong control there. Sanctions, will they come? Well, they come what? We're going to be biting our own faces off there if we do that. And then the other one is an accident. God forbid. There's about 450 nuclear reactors somewhere there, and the majority of them are very old now, Jesse. Right. They're 50, 60, 70 years old. You cannot kick that can down the road forever. So how many reactors will be in operation in the year 2035? More or less than today? What do you think? I would think more based on what China is doing. Am I incorrect there? In my opinion, that's an opinion, it's going to be far less. Okay. Far less, which eventually turns into less demand for uranium. Right. No matter what happens they're building right now. Yeah. Very interesting. Well, thank you so much for joining us today. Before I let you go, for people who want to learn more about LithiumBank, Faraday Copper, or your work, where's the best place for them to go online? I do sporadic tweets on Twitter. I'm taking it easy right now. I'm working on renovating a couple places here, and I'm focused on one company. When I wake up in the morning, it's about talking about LithiumBank and working with my team, Paul Matisik and Rob Shuchuk and the rest of my partners. And I own a large share position there. My fingerprints are on it. It's my company. I created it. I want it to be a success. It is a speculation, but I think we've laid the pieces on the table as we continue to put them together, that we've provided an opportunity. Remember in the beginning I was saying everyone loves to have that drill hole, or everyone loves the opportunity to participate, but they always cry in their beer when it doesn't work out. This is somewhat hedged because it's all three. It's exploration, being able to have these discoveries, quick to resource, quick to a development path. So that's my focus, and I'm not going to. You won't see me joining a board of directors or an advisory board or any of these things. I'm going to be staying the course until we have the next Parabolic move, and that's same for those that wonder the transition. When I stepped off the board of management of Faraday, is the same month that we took LithiumBank public. So I mean what I say, and I say what I mean. We take it very carefully, and there's a family there. We got a strong team, and they're all dedicated. So let's follow that, see where the share price goes. Great. Well, I'll put a link to your Twitter as well as the LithiumBank website in the description. It was awesome to talk to you here in Zagreb, and hope to continue the conversation next time. Have a great stay, and enjoy the summer. The summers here are fantastic. I cannot wait. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.